hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out, philsgang.com, philsgang.com. Hi, I'm Phil Grande at philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon, and welcome to my Phil's Gang radio show and podcast. For those who don't know me, my name is Phil Grande. I'm CEO of Phil's Gang. We've been teaching folks like you how to trade for over 25 years. We invite you to join us. Join us free for 10 days. So, boy, a lot to talk about. This is crazy. This is nuts what's going on. I mean, so yesterday, we've been hearing how great the economy is, how solid it is, really a great, strong economy. We've been hearing this kind of crap.
The Fed has plenty of room to cut interest rates, even as the economy holds up fine. The Fed has plenty of room to cut interest rates, even as the economy holds up fine.
We got
the Fed has
terrible news yesterday, was bad news, but they turned it into good news to get a 600-point rally, which again made the 24th all-time high since January. What are you, nuts? A 24th all-time high since January on bad news. But they turned it into good news. 600-point rally. Oh, we're going to get a rate cut. Gee, that's good news. Unbelievable. Why are they cutting rates when part of the bad news is we have increased inflation? You cut rates. By not cutting rates and let inflation roll along, that only causes you problems down the road. Higher interest rates, higher yields. Unbelievable. So the bad news is good news. The economy is far worse than we're being told. And one of the evidence of that, the major evidence, is we've been told over and over and over, if you don't believe the economy is strong, take a look at the narrowing credit spreads. Now, Wall Street loves following credit spreads because they manipulate them, because it indicates how the economy is doing. In other words, if you have more investors buying corporate bonds than U.S. Treasuries, then that means that the credit spread is narrowing. So for every one treasury you're selling, people are purchasing 50 corporate bonds. That indicates, that's that's narrowing the credit spread, which they say tells you the economy's terrific, the economy's doing well, everything's okay, there's not going to be a crash in the future. That's why we have such terrible margin debt, because people don't mind going into debt to buy stocks because they keep pounding this narrowing credit spread. That's your lifeguard. That's it right there. If it's narrowing, that means the economy's great. You're not going to get even a correction, not even a crash. But it's all manipulated by Wall Street. Wall Street firms manipulate those sales. But people don't understand that. Now, the truth is we have a slow economic growth. We got this yesterday. This is not mine. We got higher inflation. You're cutting rates with higher inflation. What are you, nuts? We got a weakening labor market, and we haven't seen such layoffs or such amount of people signing up for an unemployment check since 2022. So that doesn't square with the narrowing credit spreads that identify our economy doing very, very well. And don't worry, there's not going to be a crash, not even a correction, buy. But it doesn't line up, doesn't it? Not with a weakening labor market, increased unemployment checks, no. So yesterday what we saw was when instead of saying, I'm going to raise rates to stop the inflation, he didn't say that. He turns around and says, I'm going to cut rates. Why not? We have such a great economy. Just check your credit spreads, they're narrowing. So he's going to, instead of raising rates, he's going to cut rates. On that news, investors said, I'm leaving my growth stocks like tech stocks, and I'm going to go to value stocks like banks and oil and those sort of things and leisure. So people rotated yesterday, and the market shot up 600 points because of the rotation out of growth, let's use tech, into value that we all know are banks. And our banks are doing quite well. So this rotation sends you a real message because, again, growth stocks are tech stocks. Those are the ones you think of first. And they're very sensitive to rising yields and rising inflation. So that's why we got rising yields. And we got rising inflation. So what happens if you're in tech stocks, that erodes your returns. And investors then demand, hey, I need some higher yields here. Okay, so they're not going to get higher yields, so investors then dump. They sell off their growth or tech stocks, and they go into value stocks, because value stocks, on the other hand, banks, energy, staples, leisure, healthcare, they, unlike the growth stocks, they aren't affected. They're not sensitive to rising yields or rising inflation. And the reason they're not, because the reason they're less vulnerable, because they generate far more cash than the tech stocks or the growth stocks. Take your banks, for example. So that's why everyone rotated, but there's no follow-through today. What's that tell you? Well, it's telling you, again, that that we don't have this great economy. The labor market, remember what he's doing. There's a reason why he's cutting rates, even though he should be raising them. And remember, his target's been 2%. What's he, nuts? We're now at 2.9, what's it now? I think it's 2.9, if I'm correct. That's a long ways away. That's a lot. Someone will think, well, no, that's not far, 2 to 2.9, that's not really far. Well, when you think of it in terms of Wall Street, that's like 25 football links that you got to get through. Are you kidding me? That's a hell of a long way. 100 basis points is a long way. So Powell's making a bad decision. And his decision, he's going to cut rates because he wants to see the market go. Here's what he thinks. This is how dumb he is. because the Fed does nothing right. Remember what he's doing. He's thinking, I'm going to cut rates. That means people are going to go buy cars. They're going to go buy clothing. They're going to go and they're going to buy furniture. And boy, we're going to spark an economy. It's going to take off, and people are going to need all kinds of jobs. Manufacturing's coming back because people are going to be buying so much stuff. They got to replace it on the shelves. And boy, we're going to have this big push in labor. That's not true. Number one, when you cut rates or raise rates, it takes a minimum of 12 months before you get the benefits, sometimes as much as 18 months. Listen to what I'm saying. When you cut a rate, the emotion, a rate cut, people start buying stocks. But then all of a sudden, a week later, 2 weeks, 3 weeks later, you start giving up that gain, right? Because there's no follow through. Because the smart money starts realizing, wait a minute, we're not going to see any of those gains for at least a year, maybe more. So Powell makes this bad decision that he's going, and here's why. Here's why he's so concerned. Because remember, the labor market is key to the economy by way of jobs. That's so important, jobs are everything. And also remember, the labor market's important to the economy because it sets wages. It sets economic growth. It affects how much a consumer is going to spend. But most of all, productivity. But our productivity is down. Our productivity isn't up. It's not increasing. It's been decreasing. We don't produce anymore. We're not producing. That's why Trump is doing these tariffs to try to get everybody back here to go to work again in a factory and start producing our own stuff. We're not producing. So this is not going to end well. But it's okay, because the market's not going to come down. Not as long as they keep convincing people that credit spreads are narrowing, and they keep convincing people that, again, they're going to keep printing as much money. Now remember, that M2 money supply is killing us. They keep printing and printing and printing this money to throw into the banks to give to the CEOs, so the CEOs will buy their own stock. And they're buying their own stock because they're masking how bad their earnings are. So their earnings look like they're going up, and actually they are, and it pushes up stock prices, but it's all fake, not on increased revenues. They should be in jail. Somebody should pass that as a crime. I mean, how can you sit there and your stock goes from $20 to $160 in 4 quarters? But each one of those quarters, the sales have never increased over $1 million. $1 million the first quarter, $1 million second quarter, third, and fourth. Well, wait a minute. If your sales aren't increasing, how the hell are your margins increasing? Pushing up your stock price from 20 to 160. It's fraud. It's manipulation. They don't call it fraud. They call it financial engineering. So yesterday was a big disappointment, because what's happening yesterday, he's putting us on the wrong track. And that's what the Federal Reserve always does. They're stupid. I don't know where they get such stupid people to run the Federal Reserve. And the people they put on the board are so stupid. They got to get rid of the Federal Reserve. They do nothing right. They've never done anything right. They've always hurt us. They always hurt the economy. They've always hurt Main Street. They're there for one reason, for Wall Street, not Main Street. They're there working with Wall Street to take the money from Main Street and push it up to the top 1%. It's just crazy. So how can the economy be so fine? Business, again, bankruptcies are up 45%. And remember, the banks aren't disclosing their losses. Over $500 million in losses. They're not disclosing them. They're hiding them. I mean, but what keeps the rally going with all this crap underneath that's eroding? Again, all you got to do is keep printing more money, M2 money supply, shove it into the banks give it to the CEOs buy their own stock, and then the stock goes straight up. Oh my God, look how good their earnings are. And their earnings are all fake. So the bonds, okay, they've been falling now for about 4 weeks. So why are they falling? Well, first of all, because of price increase. And again, they're not they weren't anticipating any inflation until yesterday. Weak job openings, because they're anticipating a rate cut. That's another reason why the yields were dropping, okay, the falling yields. Matter of fact, we dropped down to, we hit I think it was 3.9% just for a second. Then it went back up to 4.04. We also have slow economic growth. This is when you have bond yields falling, this is bad news. You got again, we're also going to see a cut in oil prices, is telling us. Now, what's that mean? Well, oil prices are important because it's a gauge. It's a gauge of how the economy is really doing. If oil prices are going up, that means the demand for oil, because we got productivity going up. There's production going on. People are making stuff for the consumer. We don't have that. That's not going on. So the bond market, as I said, has been, is where you can find the truth, but they're trying to manipulate the bond market. So again, if you go back to our stocks, gold, that's where we've been making all our money, in gold. The gold miner stocks, they've been doing terrific. And just recently, I told my members, start buying banks. Start buying bank stocks. And we did. I said, they got to rotate to these bank stocks. So they're going to rotate out of tech. And I said, they're going to go to value. And the first place they're going to stop is the bank stocks. And boom, they just start taking off. So that's where we are with this, and they keep telling us how great the economy is. It's not great. But you don't need a great economy anymore to set new record highs. But number 24 yesterday, in one of the worst economies, one of the worst labor markets ever. But the stock market keeps hitting this 24th record high. You got to learn how to trade a market like this. You got to learn how to go long and short, especially short. For more information, go to philsgang.com. I'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Learn, invest, and make profits
with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to my radio show and podcast, which, by the way, we've been doing this radio show for over 30 years now. So we're being told how great the economy is doing. Yesterday, it showed the economy's not doing well, but we had a 600-point rally because they're going to cut rates. And as long as you cut rates, nobody cares how the economy is doing. Only the folks on Main Street are getting screwed still with gasoline prices, groceries, all the things they need. Those prices are still going up. They haven't come down. The only thing that's come down is the rate of which inflation's going up. So when they say inflation's coming down, all they mean is the rate at which it's going up is slowing. It's like the government when they said, oh, we're cutting expenses. We just cut $200 million out of defense. But they raised it from $600 million to $800, and then they cut it $200 after they raised it. And this, I have to get a chuckle out of all this stuff here. This is insane right here.
Wealth has just absolutely exploded over just since 2019. The wealth of all of the Americans.
Wealth of all the Americans exploded. That's a big fat lie. What's he, nuts? No. The wealth is going to the top 1%. The top 1%. The 1/100th of 1%. And much of it's going to the top 10%. But the real wealth is going to the top 1/100th of 1%, not to be confused with the top 1%. And then, of course, you have the top, the 10%. But the folks, no. The wealth of the 1%, okay, has gone up. I thought it was 7 times. It's gone up 13 times. The wealth of Main Street is going up 1.5 times. But it doesn't bother them to come out and lie. It just doesn't bother them. I mean, it's just amazing, right?
We believe we've been in sort of a 3-year rolling recession, and that the end of that recession ended in April with the tariffs. That was the final capitulation. So we think that's a new bull market, right? We think the bear market ended in basically April. It was a pretty nasty one. There were several, along the way, and that was the final flush.
Oh, come on, geez. We had this rally of over 30% from April. That was all because of stock buybacks. If you didn't have the $6 trillion in stock buybacks, that would not have happened. If you didn't have the increase in money supply, which again makes inflation go up, if you didn't have that increase in money supply that is printed and they shove it to the banks take it, they don't give it to you or me, they take it and they give it to the CEOs for stock buybacks. So between stock buybacks and plowing enough money in, or credit, so people can borrow money to buy stocks, margin, it's the only reason. So when people ask me, will the market keep going up in an economy? I mean, think about it. This is nuts, right? So if you look at the market and you look at the economy, right? We have, I'll just give you an example of how weird this is. It's unbelievable. So we have the consumer, right? Bankruptcies increased 24% since January. 18 trillion in household debt. Record delinquencies, mortgages, autos, credit cards. Record minimum credit card payments. Record refi cash out, 21 billion. They're not paying it back. Home-related expenses have increased from 30% to now 48%. 30 to 48%. So after you get your paycheck tonight, they take your payout, you're going to have to pay almost 50% of that rest of the check going to your home expenses. That's why when Powell, he's so stupid when he says, oh, but if I cut rates, even though there's inflation, I should be raising rates, but I'm going to cut it, and I'm going to create a lot of jobs, because, boy, once people see their credit card interest come down and a used car interest come down, boy, they're going to be buying like crazy. No, they're not, because they don't have credit. They don't have access to credit anymore. What a lie that is. What a lie. I mean, that's awful. So we have record delinquencies. So where are they going to get the credit from? So if all of a sudden they cut auto prices or they cut the meat at the store, steak prices, people don't have the credit. They don't have the credit cards anymore. They're all tapped out. And then the housing affordability. What do they think? They're going to drop the rate by 0.25%. All of a sudden interest rates are going to go down to from 6.5% now down to 1%. No, you're not going to see the interest rate drop anywhere where it's helpful, and for at least a year. It takes a year. So the housing affordability gap is the highest ever, 57%. People don't make $125,000 a year. The average household makes $70,000, but you got about $125,000 to qualify for a $462,000 house, which is medium price homes today, and you need that's a payment of $3,600 a month. That's without taxes, upkeep, and everything else. Well, how are they going to do that on $70,000? They're not. Businesses are screwed. Okay, not only we have record undisclosed bank losses. Okay. We have, again, commercial real estate delinquencies. We've never seen it this bad. Also, construction, spending on construction. We haven't seen it this bad since 2008. But they're telling us how great things are, right? Here's the one I like right here. This guy here. He's a real nut job. Jared Bernstein. Listen to what he has to say.
Well, on the last part, I'd probably hit you with a little bit of a fact check, which is that real wages have been going up
several months.
Last several months.
I think disagree.
And I think that's really important.
Okay.
Jared Bernstein is a liar. Now, remember Bernstein? He's the one that manipulated the 1.5 million in fake jobs. That's him. Because remember, he is Joe Biden's economic advisor. He's Joe Biden's go-to guy. He's been with him all through the Senate, all through the vice presidency, all through the presidency. He's the one that works directly with the BLS to rig all the numbers that gave us 1.5 million. And I'll never forget the day he came out and said, do you know there is no recession? Even though we had back-to-back quarters, just in 2022, he says, even though we got back-to-back negative quarters, we can't call it a recession. How can you call it a recession when we're creating 400,000 jobs a month? He was a liar with his pants on fire. Are you nuts? 400,000? Nobody believed it. He made it all up. And just what happened? Last week, they just took all of those jobs that were fake, 1.5 million in total, and they got rid of them all, cleaned them all up. So when you hear this guy tell you...
Well, on the last part, I'd probably hit you with a little bit of a fact check, which is that real wages have been going up.
Several months.
Real wages haven't been going up at all. When you take inflation and real wages, inflations are outpacing wages. They're even doing that today. That's why they lie about, again, they lie about inflation. So the way to make money in the stock market is you got to just follow the money. Where's the money going? We've been doing this for 30 years. Where's the money going? It's all you want to know. Follow the money. Forget fundamentals. First of all, I wouldn't trust anything, any word, especially that the first two letters start with F-U. Are you nuts? So again, remember, all the fundamentals in the market, throw them out. They're useless. You got to follow the money. You got to follow the pricing. And that's what we do every day here at Phil's Gang. And you got to stop trying to trade to perfection. What's that mean? Well, that means that 90% of retail investors for the last 50 years, it's not my numbers, have been losing money. But they keep coming back like gamblers and keep losing and losing and losing because they have to trade to perfection. Nobody's that good. What's that mean? It means that you only buy stocks. You're scared to short stocks. So when the market corrects or pulls back, you lose money because the market goes down much faster than it ever goes up. So you got to learn how to sell short. What are you going to do? Go buy Coca-Cola? You're going to buy Clorox. Is that where you're going to hide? You're going to go buy symbol XLP so you can buy all the staples. You're going to be fine. No, there's no place to hide. That's what's going on here. So again, here, listen to this. And then you got Powell, who still says,
the effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level.
What a lie that is. No, they just started. They just started 2 weeks ago. Everything comes in this country starting I think it was 3 Fridays. This is the 3rd Friday. 3 Fridays ago. 10% to 17%. Anything that comes into this country is going to get hit between 10 and 17%. We've already seen what it's doing, okay? What it's doing. It's a tax on the consumer. It's hurting them. We're seeing that. We're already seeing it in the early numbers. It's going to get worse, not better, until companies, all these billions and billions of dollars that companies committed to build their factories here, it's going to take 5 to 10 years to build these factories. Let's say it's on fast pace, 5 years. It takes to build a house just 2 years. You think you can build a 1 million square foot factory in a year? No, it takes almost 4 or 5 years to build a factory. So it's going to be a long time. Now, once we get the factories up and running, now, yes, now we're going to benefit. But between now and 5 years, we're not going to benefit. That's why they keep lying to us and tell us how great the labor market is, how the credit spreads are narrowing. And remember what credit spreads mean. I know it sounds important. It's not. It just means that Wall Street manipulates the sales. So it looks like that Wall Street is selling more corporate bonds to investors than treasuries, 10-year treasuries. So they manipulate that. So the more that they sell in corporate bonds, let's say 10 to 1, 20 to 1, it's called narrowing the spread. Narrowing the spread is always meant to Wall Street that you're not going to have a crash. You're not going to have a crash. You're not going to have a correction. Everything's in good shape. The economy's in good shape. That's why you hear that term more and more and more when it's a lie. It's just unbelievable, right?
I think inflation is most of the way back to 2%.
Are you kidding? What a lie that's been. It's now at 2.9. Remember, inflation, we were never told the truth. When Biden ran inflation up to 9%, it wasn't 9%. It was near 15%. And then the lie continues. 2% inflation? What are you, nuts? Just go buy a pickle. It costs more. Inflation on pickles are going through the roof. You got to be nuts. So, again, the bond market's your friend if you know how to read the bond market. You'll never get hurt in the stock market if you learn how to read the bond market. It always tells you the truth. It never lies. Go listen to all these jibber jabbers on TV, CNBC. They always lie. All they do is lie, okay? Now, so what's going to happen now is this. We're going to continue to rally. No matter how bad the labor market gets, no matter how tight lending gets, I mean, there's no credit left. People can't get credit. They're all shut off. Their credit cards are all tapped. So, but the market can keep going up. The worse our economy gets, the more they're going to increase the money supply to make sure that corporations cheat and do stock buybacks to create an illusion that their earnings are good. So what we're going to do, and we've been doing it for 25 to 30 years, we follow the money, not the fundamentals. And as long as you follow the money, that means you're following the pricing of the stock. And we can show you how to do that. Once you know how to follow the pricing and you know how to sell short as well as going long, then you're not trading to perfection. That's when you start making money. You're no longer part of the 90% who lose money. Join my gang, philsgang.com, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.